Our mission at SD Bullion is clear: the lowest cost gold and silver available online. While we do not have pretty blue boxes, free shipping on every order, or glamorous gold and silver infomercials, SD Bullion has the lowest prices that may save you hundreds on your next order. So before you make your next investment, do the math and join the over 40,000 new customers who have recently made the switch to SD Bullion. Why pay more?
Hey everyone, this is Elijah Johnson with SilverDoctors.com, and with us today is Lior Gantz from WealthResearchGroup.com. Lior, thank you so much for joining us today.
Thanks for having me.
All right. Well, I'd first like to discuss the silver market. Now, you recently have been discussing that JPMorgan is running the world's most monopolized market, the silver market, and that they're unfairly manipulating the price. Can you discuss this?
Sure. First of all, it's not just JPMorgan. Obviously, Deutsche Bank has settled out of court. HSBC has been named. Barclays in England. So there's a bunch of major banks, and what they're supposed to be doing is add liquidity to the market, but they do all sorts of silver manipulation, fixing the price, suppressing the price, shorting it. There's so many things that are happening in the silver market. But what is important is that part of it is now changing. There's a wave of regulations that are coming due in 2018 that are changing the amount and exposure that banks will allow themselves now that Deutsche Bank has been fined $38 million, and the eyes of more regulators are on these banks. You're already starting to see a change in the way silver trades. But that said, let's take a look at 2016, right? 2016, the silver, the global silver nominal trading is about $2.2 billion. I'm sorry, $2.2 trillion. And the estimated global investment in silver is just $4.4 billion. So you've got a leveraged paper market of about $233 to 1. Pretty insane. And just remember, when you manipulate prices, when you suppress prices, you're just condensing energy, right? So on the flip side, when that condensed energy releases, it can be spectacular. Obviously, there's this has been around for many years. This talk of silver manipulation, silver rigging, and when will silver break out? It's all of these are open questions, but it is very important to understand that when you got something that's leveraged 233 to 1, once you start deleveraging, then the price almost acts accordingly. So if this goes from 233 to 1 to 100 to 1, silver will double, most likely, or close to double. When you see this thing going to 50 to 1, it will quadruple. And from today's prices, you're looking at $50 to $60 per ounce of silver. Now, that will change a lot of things in the silver supply, obviously, because more companies will come into the market. But the opportunity will be in that 2 to 3 year period before new production comes in.
Now, you talk about what JPMorgan does and how it's kind of like they're playing a game of poker where they can see all of what the other players are doing, and they do this because they run the silver ETF SLV. Can you expand on this?
Yeah, sure. So basically, the JPMorgan, with the fact that they can look at the screens of what the clients are doing and where people are setting their options, the short positions, the long positions, the futures, they can see kind of the emotional trend or thread line running through traders from the entire planet, from behind the scenes. They can use this information either to entice their own clients to do something while they do the opposite of that, knowing fully well that the clients will lose money, which is what they've been up to for years. And what is more remarkable, and this has no a 100% confirmation, but most likely they're building a physical hoard of their own for the time when the silver manipulation will end, and then the price of silver will explode to the upside. So you've got this massive short position on paper that they're doing and making a profit of, and they're also accumulating on the physical side using this suppressed price that they themselves create. It's a very smart game on their part, but it's very unfortunate that it goes on for such a long time. If you're looking to expand your physical position, your bullion position, it's great for you because you get to do it at lower prices. But as a silver stock investor, this is very frustrating. For a lot of people. But on the flip side, they accumulate so much physical silver that they themselves will be beneficiaries of rising silver prices, which is definitely an incentive once this regulation comes in. And obviously, this regulation, this fear that's going on right now, has already scared away the CME group. It scared away Thomson Reuters. These are the two custodians that are now ending their obligations with the COMEX 2 years ahead of time. So you've got a lot of changes in the silver market. Hopefully, you'll see the end of this manipulation, or the unwinding of this manipulation, come into fruition in the next 2 to 3 years. And as I've said many times, I think the more appropriate silver to gold ratio for these times, when gold is used as money on the governmental central bank side and silver is not monetized by big institutions, I think it's about 40-1. So you're looking at a lot higher silver prices.
Now, is what is happening, this manipulation, is that even legal, what they're doing?
Well, it is legal unless you prove it that this is blatant manipulation. Meaning, if leverage is legal, and naked leverage is legal as well. Is it ethical? Obviously, no, because they're using the mechanism of fiat money and credit to their behalf, with the fact that they are the one issuing credit to the market. So they've got an advantage, a very unfair advantage over regular investors. Is it illegal? Of course, if you get caught manipulating on the spot, it is illegal, obviously, because Deutsche has already admitted to silver manipulation. That's what they have admitted to manipulating the price. Now, when you leverage something to the order of what they're doing, to me, it is illegal for sure. The entire market, if it's 233-1 leverage, that's Elijah. That's illegal. Just think of any other industry where the actual commodity trades for $1 to every $233 that exchange in paper. It's not only illegal, it's dangerous.
Now, you've talked about that the gold and silver ratio is completely out of whack right now. And if we see silver kind of revalue itself and rebalance itself, we could see silver jump to $50 or $60 an ounce. Can you reiterate a little bit about the reasoning behind that?
Sure. Obviously, going back in history, the ratio is not 75-1 as it is today. Gold is a different type of metal than the other metals that are considered commodities. All the gold ever in supply is still around, most of it. If it's not in jewelry or used as partly for electronical components, it's still around. So the demand for gold, and what drives gold price higher, especially in the fiat monetary system, is not a lack of supply. There is supply. It is the investment demand coming not from India and their jewelry supply, because that's very cyclical, very, very seasonal. What drives gold price higher is its role as an alternative currency to all the national currencies. So when gold outperforms other national currencies, it outperforms the price of US dollars as well. And that happens in a declining or a negative interest rate environment, which is what's going on today. But the other fact of this, the other side of this, is that gold prices act better if the S&P 500 is underperforming, and this is not happening today. And that's why you don't see gold exploding to the upside, going higher. Obviously, only 7% of the world's currency is backed by gold right now, with the price of it today. In 1980, it was 1-to-1 at $850 per ounce. If you want to equate that to today, if the U.S. wants to cover all of its currency supply, an ounce of gold will need to be over $15,000 per ounce. So obviously, that's very, very far away, very far away. We're only covering 7% of the currency supply, and globally, you're looking at if you want to take all the debt and cover it with ounces of gold, it will be about $23,000 per ounce. So you're very far away from covering the entire currency supply. But there's a clear mentality with people. Obviously, after 46 years of fiat monetary system, they're very unaware of what the difference is between a bill and money. To most people, 99% of people, even if you whisper in their ears the entire Federal Reserve Act and you explain to them everything about the fiat monetary system, they will not change a single thing about what they're doing, how they're living, or how they're transacting. It will take a real crisis of confidence for this system to change. Most people, including people who believe in the gold theme, transact in dollars. They're not completely out of the system. They don't own 100% gold. They have bank accounts, etc. So there's a clear subconscious theme throughout the planet that currencies are safe somehow. And this is very dangerous. If you own most of your savings just in national currency, you have a real problem when the time comes that the confidence level goes down substantially. And I think confidence, either you have it or you don't, right, Elijah? So now people have confidence, but this can easily turn to a non-confidence environment. And but like you saw in 2008, it will take a real panic, because even 2008 did not shake most people. It took 2 or 3 suits on TV reassuring everyone that everything's okay to get everything back to normal. So it would take a real horrible crisis for the entire system to change. But in my opinion, the kind of stimulus that is going around right now with central banks buying $7 trillion worth of assets only in the first 4 months of 2017 is very problematic. So they're leveraging and leveraging and leveraging, and once they start unwinding this, it's going to be very, very dangerous for people saving. So you've got to be very diversified within asset classes and not have your savings just in national currency. I don't know if that answers your question or not.
One thing that I was going to also point out is you were talking about how right now people have confidence in the currency, and also other countries at least have some confidence in the US dollar. But one of the things you also have mentioned recently is that some countries kind of see gold as money, but no countries see silver as money right now. And you see that there could be this remonetization, as you say, of silver. So how would that impact the silver market?
Sure, and going back to your last question, because you've asked me about the silver price and I never answered that. I don't think it will be a one night event. I don't think you wake up in the morning and silver will be repriced. It will be a very gradual rise in price. The last time that silver to gold was 75-1, it started and sparked a real bull market in the gold and silver stocks sector, and usually 80 to 1 is the extreme for the last 45 years. So once you see that going to 80 to 1, it usually reverts back to around 50 to 1. So 51, you'll see silver at a lot higher prices. It is important to understand that silver acts very much today as an industrial metal. So the incentive of commerce is to get that price down and not up. It's not acting as a stabilizer for currencies. So the incentive of every commercial company in the world is to see the price of silver go down, because that will help the consumer buy more products like laptops, cell phones, etc., and the myriad of other thousands of applications for silver, which will all be priced good for the consumer if silver prices go down. Now, if silver resumes a monetary position with either institutions, large funds, governments, etc., that changes the whole theme for silver, and it becomes much more entwined with its historical average of about 16 to 1. So it's speculation whether or not this will happen, and whether or not people will reinstitute the free market, or whoever institutes silver back as a monetary unit. But you got to remember, the biggest and largest and most stable empires ever did not use a gold standard. They used a silver standard. The Ottoman Empire not too long ago, the Roman Empire, even the Greeks. So silver is throughout history been used as money in commerce, very much so. But obviously, in the 21st century, we're looking at a very different kind of silver standard that's going to be very digitalized, obviously backed by silver, but very comfortable for the average person. It's not like you're going to carry around silver coins. That will never come back into commerce. The world is moving into digital currencies, hopefully outside of the realm of government, but it doesn't look like it right now. But even if a gold or silver standard of some sort gets reinstituted, it's going to be very comfortable and very easy to deal with. It's not going to be medieval times.
All right. Well, Lior Gantz, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online?
Sure. I think it's important that people also take a look at the companies and not only the physical bullion. Physical bullion will never make any investor rich unless there's a total catastrophe, and in which time getting rich will not be your highest priority. Physical gold and silver are insurance, and nobody buys 10 life insurance policies and gets rich off of that. It's not the way to think about physical gold and silver. It's very important for your listeners, even if this is not what they want to hear. It is important that they hear this. The physical bullion aspect is to protect a portion of your savings. So you take a piece of your savings and you put it into physical bullion. If you're looking to take advantage of gold and silver and other industrial metals, such as zinc, for instance, that is in very short supply, you've got to look at supply-demand fundamentals, at the cyclical undervaluation and overvaluation of the stocks, and take a position, not a substantial one, because these are very dangerous companies to be involved with if you don't know what you're doing. And take a position with silver or gold or zinc companies. That will propel your portfolio much, much higher if you know what you're doing. For example, just to give you an idea, Elijah, a company that we cover, a wealth research group called Zinc One, which Keith Neumeyer is a major shareholder of, will be a producer in 3 years. They've just acquired a property, and they will be a producer in about 3 years. This is the outline. This is what they're projecting. And by the way, Elijah, just to make sure, I am a big supporter of Zinc One, and I own shares. I've owned them since the day the company launched on the public exchange for a few months now. We're following the company, and we're big supporters of Keith Neumeyer and what the company itself is doing with the management team. So zinc mines are not the primary product of zinc miners. Zinc miners usually do not have zinc as their main target. They have it as a byproduct. So right now the supply aspect of the zinc market is very tight, with China consuming 47% of the world's supply. If you're looking at a project from start to finish, you're looking at about 10 to 15 years to get it permitted, to get it done. What they've done is leapfrog that entire process with a high-grade project in South America. That's just one example. What I did create for your listeners is our entire watch list, the entire junior sector quality companies that we're looking at with our buy-up prices, and that's at wealthresearchgroup.com/watch list. And if you want to become even more educated and learn how to evaluate these companies from start to finish, we created a special report for today, which is on wealthresearchgroup.com/gold playbook. And on Gold Playbook, you can kind of go and see exactly how we evaluate these companies start to finish.
All right. Well, Lior Gantz, thank you once again for joining us today.
Thanks, Elijah.